What's up, traders? SPY just pulled off one of the sneakiest bear traps we've seen in weeks, and the charts are screaming for attention. If you're holding long into next week, you need to hear this. I'll break down the bear trap, the critical level that changes everything, and where the highest probability setups are hiding. Let's go. SPY closed the week at 599.14, up 1.03% on Friday, but here's the catch. It failed to make a new high on Friday, and MACD momentum on the daily is rolling over. We had a gap up into resistance, followed by lower highs and decaying volume. Classic bull trap structure. But SPY just broke above Friday's high, catching early shorts off guard, and it might just be the spark that triggers a face-melting squeeze. In today's quick breakdown, I'll show you why this breakout isn't your typical bull trap, but a full-on bear trap with fuel to go higher. If you're trading SPY or just watching from the sidelines, this is the moment to zoom in. That 593 level, it failed to break. Instead, we've got a clean range reclaim, and now a 30-minute pivot breakout at 601.78 is within striking distance. If that triggers, bulls could push this thing into the 604 to 605 magnet zone before any real resistance kicks in. If you've been learning something from these breakdowns, do me a quick favor and hit that like button. And subscribe if you haven't already. It's free, it helps more traders find this, and it keeps me caffeinated so I can keep catching these traps for you. Weekly Bollinger Bands are pinching. The daily chart shows price hugging the upper band while RSI stalls below 70, showing momentum is waning. On the hourly, SPY rejected just below 601, a key volume shelf. And now, we're watching closely for signs of distribution. The level that absolutely matters, 593.22. If SPY loses that level, we could unwind quickly to 588.50, then 578, where the 200-day sits. Below that, things start getting spicy. A failed breakdown that reclaims a tight range is one of the most powerful reversal signals in the game. A failed breakdown reclaims that changing 100-day sectors is especially when shorts are loaded into options expiration week. If 601.78 gives way, don't be surprised to see algos chase this higher towards 604 plus before any real fade attempt. If bulls want to flip the script, they need a clean reclaim above 601.80 with strength. That opens the door to 607. If we break above and hold, the weekly Bollinger Band resistance at 629 could become a magnet, but only if 601 clears first with volume. This is a high-risk zone. I'm watching for a possible gap up Tuesday day to fade if it hits 601.80 early. I'll consider calls only if we reclaim and hold above 601.80 and consolidate above. Otherwise, I'm looking for a rug pull setup back into 593 and potentially 588. That 50-day at 561 is still the mean reversion zone if things accelerate. SPY finished the week strong on paper, up over 6 points, but the internals are showing weakness. The MACD histogram has flattened. Weekly RSI is turning over near 58. Volume dropped off into Friday's close, which tells us the rally is suspect. Next week, all eyes are on CPI data and the FOMC rate statement. If the Fed stays hawkish, risk assets could finally crack. Smash that like button if you appreciate this kind of no BS breakdown. It really helps get this video in front of more traders who need it. Don't get chopped up here. SPY is at a crossroads, and this bull trap could unravel quickly if 593 fails. Stay nimble, know your levels, and trade the reaction, not the prediction. Comment below. Do you think this was the top, or are we just getting started? And don't forget to check the pinned comment for my latest trade alerts and private group access.